for now in the near term. Sonia.
Absolutely. So let's see. For today, at least, the SGX Nifty is not too bad if you're a bull, indicating that the start will be in the green. So it's up almost 64 points right now at the highest point of trade. But there's lots happening, not just in the world of equities, but in the world of currencies as well. So let's get you some money market views this morning. We have a first comment coming in from Kunal Sodhani of Shinhan Bank, who says the prospects for more aggressive Fed rate hikes and elevated US bond yields underpin the US dollar. Italy has elected Giorgia Meloni in a snap election and oil prices are cooled off further. The dollar index may once again test 114.5 levels. The Chinese central bank reinstates risk reserves for derivatives to support the yuan. Dollar-yuan pair should be eyed as the move reflects in the dollar-rupee pair as well. For the dollar-rupee, 80.90 acts as a support, while 81.75 may act as a resistance.
All right, let's listen to some opinion that we got from the Allianz Chief Economic Advisor, Mohammad Al-Arian, on global central banks and the rise in U.S., the very sharp rise we saw in the U.S. Treasury yields. Listen in.
This is about governments and central banks being sources of volatility rather than volatility suppressors. So they are adding to the volatility in the markets. That's particularly clear in the UK, but also in the US with the Fed. And it's also about horrible technicals. It's quite a mess in some of these markets. And these are the main markets for the global economy. So it's not a good scene. Hopefully it's going to calm down. But we've also got to make sure that policymakers stop adding to the volatility, because that's what they've been doing recently. We have this relentless increase in yields, this relentless appreciation of the dollar. They are both bad news for corporates. They are bad news for the economy. And until we can break this cycle, and the reason why this last leg up in yields is happening, and the reason why this last leg up in the dollar index is happening, is because we are the safe haven. There are fires burning all over, not just the developing world, but the advanced countries, and we are the safe haven. And one consequence of that is our currency gets stronger, and our yields have to somewhat follow what's happening elsewhere in the world. So that is the tragedy that we're in right now. If we didn't have inflation, if we didn't have a Fed behind the curve, our yields would be coming down. But unfortunately, that's not our reality.
I mean, that's the point.